Alright guys, in this video I am going to go over Nvidia. This video is very simple, simply explaining how Nvidia was able to scam a lot of investors into buying their stocks. It is a pyramid scheme, but the way they're doing is legal. So whatever they're doing right now is not illegal. It's legal, but I just want you guys to know that they're able to generate all these revenues this way. Okay, so I'm just trying to show you guys uh, this simple fact. Okay, so if you do own Nvidia, then you will know what you own after I'm done with this video. So okay. So Nvidia funded about 49 companies. Okay. So companies. Okay. So you have companies that Nvidia funded, which is about, I think they're about 49 or 50 now, 50 companies. And then on this side you have NVDA. Okay, so you have Nvidia. So I'm just gonna use random numbers just so I can like explain it to you guys. Nvidia fund these companies, let's say $20 billion, right? And then they use that $20 billion and they go to the banks, hedge funds, whatever, right? They go to, okay. So they go to the banks and they say, I need to borrow $50 billion, right? I have $20 billion cash and I'm going to build a business and you know, AI is booming. So all these banks are going to analyze this trend of business or whatever they need to do. And then they're going to say, okay, fine. Since AI is hot right now, we are going to give you $40 billion. Okay? So that $40 billion goes to these companies. Now, these companies have $60 billion total. And then they use $50 billion worth of Nvidia chips. Okay? So let's say they spent $50 billion of Nvidia chips. Let's say Nvidia is selling their chips for, let's say, $2,000 with a 50% margin. Now, since Nvidia is selling it to the companies that they funded in the first place, they're going to mark up the margin on those. So then let's say, okay, it's fine. It's okay. So then Nvidia get to put $50 billion worth of revenues in their books. And that's without any expenses. Think about it. It just costs to produce. That's it. Costs to produce with higher margins. So their earnings looks really good. But for example, if Nvidia would have to build the data centers themselves, right? So let's say you need $20 billion worth of GPUs, another maybe $10 billion worth of like land, all these things, right? I'm just giving you guys like just random numbers, right? And then let's say it costs about $5 billion for labor costs, like construction costs, whatever. So now you have about $35 billion that you cannot put it in your book as revenues. You see what I'm saying? Because if Nvidia built those data centers themselves, that $35 have to go towards expenses. So there's no revenues. If they had to do that, their stock prices wouldn't be at where they're at right now. Because of them doing this multiple times with 49 companies, Nvidia was able to generate the amount of revenues that they're able to generate without putting expenses in the books, right? Even this $20 billion that they invested doesn't go towards expenses, because expenses are more like expenditures, right? Land, material costs, and all these things. There is no material cost in this $20 billion. This $20 billion is purely investment. So that $20 billion go towards their investments, which doesn't have any negative effect. Matter of fact, it some people will see it as a positive thing. So then you get to count $50 billion as revenue with 60% profit. You see what I'm saying? So then you come out with $30 billion in profit. So let's say they have let's say for example, $30 billion outstanding shares. That means they just earn $1 per share, right? $1 per share. Okay, $1 per share. You see what I'm saying? It's very simple, but this is just another way of buying your own products. Just not directly. You're indirectly doing it by giving your money to these companies. And these companies go into the banks, and the banks lending them money, and they use that money to buy products. So you're creating shell companies. And then these companies are building data centers. So you're not taking a lot of risk. The only risk that you're taking is this $20 billion. But let's say even if these companies fail in the next 2-3 years, you get to count the $50 billion revenues right now. So they're pulling forward so much demand, but the risk is that nobody knows if these data centers are going to be profitable later on. Remember, everything that all the GPUs that Nvidia sold to these companies, they devalue like crazy. In the next couple of years, all those GPUs will probably be worth maybe 40% of what they actually cost right now. So depreciation, and then if these companies bought the land to build these data centers, and then you're gonna have depreciation in land. So there's a lot of depreciating assets, okay? And if the data centers doesn't do well in the future, right? I'm talking about the risk now. If they don't do well, like a lot of people think they would, and all these companies right here will go out of business, right? Even if this happens in the next 2-3 years from now on, Nvidia was able to capture all this revenues. It's not just revenues. They're able to capture the profit too as well. So even though they spent $20 billion in investments, they're actually making back $30 billion in profit. So they're already making 1.5 times their investment back instantly. Literally instantly. You see what I'm saying? So it's a form of scam. Like, it's not, so whatever they're doing is not illegal. It's legal to do it. But I just want you guys to see this is what you're buying into. So there is no organic growth. You are creating demand for your own products. So there is no organic growth. Literally, there is no organic growth. The only growth that is coming from is the growth that you artificially created by funding these companies, and then these companies buying your own product. I know there's going to be a lot of people that are going to be mad at me for doing this video, but this is exactly what you're buying into, guys. This is not a rocket science. Very simple. Simply put it, they're escaping expenses. They're escaping having to put a lot of expenses into the books while only putting profits in the books. That's why the earnings look so good, because they literally have no expenses. Because Nvidia isn't the one who's paying for the land to build the data centers, who isn't using their own GPUs as to build the data centers. So all these expenses doesn't go to them. All the risk went to these companies, and the risk went to these banks. But the thing is, these banks and hedge funds, they know exactly what's going on, right? So if these banks know exactly what's going on, and these companies come to them and say, hey, look, I need $40-60 billion, whatever, they say, okay, fine. Okay, Nvidia stocks right now is trading at, let's say, $90 a share. But if they see all these profits going into Nvidia's earnings, and if they know that stock prices are gonna go up, right, to, let's say, like $120, well, of course they're gonna land him. But the thing is, they're probably gonna go out there and buy, let's say, $30 billion worth of Nvidia stocks before the banks give them the money, right? So you buy the stocks. So you basically, for $90, 40, $30 billion worth of Nvidia stocks at 90, and then if stock prices goes up, let's say 40%, you're literally making $15 billion from your investment. But you also have a lot of collateral, meaning these companies are collateralizing these loans. Okay, you have $40 billion worth of collateral. So basically, even if the GPUs that these companies buy goes down 50%, right? Let's say it costs them, let's say, let's say if everything that they put into build these data center goes down by 50% in value, you see, you're not really risking any money because you have all these collateral. So you own the company's assets. So basically, the company's going to sell off their assets and then give the money right back to the banks, right? But the thing is, Nvidia share prices have gone up more than 50%. It's gone up like 20,000% for the past 5 years or so. So you just do the math. I mean, this is kind of messy the way I did it here, but guys, this is a scam. It's not an illegal scam, it's a legal scam. But you're literally buying your own products. You are creating the demand for your own products by doing this. And that's not organic growth. I don't care how you put it. Organic growth comes from masses. Okay, like people like you and me, ordinary people go out and going out there and buying like Nvidia GPUs, right? Graphics cards, all these things. That's organic growth. It's coming from demand that you don't create, right? That's organic growth. But right here, that what I'm explaining to you guys, the way I'm explaining to you guys, and the way it's actually going right now, this is the fact that they're, this is a fact. I'm trying to point out the fact. This is literally what they're doing. There is no organic growth. So before you buy any Nvidia stocks, know what you are going to own. You are owning a company that is creating the demand that they product, like demand for their own product. There is no organic growth. So I would say do whatever you want, but this is exactly what the company is doing. So anyways, I'll talk to you guys later.